Good afternoon, everyone, and thank you for joining us at Ignitis Group earnings call. Today, Ignitis Group CEO Darius Maikštėnas, together with CFO Jonas Rimavičius, will present results for the first quarter of 2022. Meanwhile, Ainė Grinkevičienė, Investor Relations Officer, will moderate a Q&A session, which we hold shortly after the management presentation. So with that, Darius Maikštėnas, please begin.
Hello, everyone, and thank you for joining us at earnings call. Let me turn straight into our strategic highlights for second quarter of 2022. We continued delivering strong financial results despite unprecedented energy sector dynamics. In Q2, our adjusted EBITDA grew by 42.6% to 111.4 million euros compared to the same period of last year. The increase was mainly driven by green generation segment performance due to the launch of Pomerania wind farm in Poland and better results of our hydro portfolio performance. As a result, the segment adjusted EBITDA accounted for almost 2/3 of group's total result. Supported by better than expected green generation growth, we increased our 2022 adjusted EBITDA guidance from 290-335 to 330-360 million euros. As already mentioned, our result was driven by green generation, and to ensure this space going forward, we continued working on its expansion. Since the end of 2021, we expanded our green generation pipeline by around 230 megawatts, out of which around 80 megawatts in Q1 2022, with greenfield projects by securing land plots for onshore wind and solar projects in Lithuania and in Poland. Continued constructing and developing our existing projects with no changes and in key milestones. And to fasten the growth even further, we strengthened a renewable team by electing a new CEO, Thierry Allens. His extensive experience in offshore wind development in key industry and leading companies, I believe, will push us forward with project development. To add, we expect forming rest of Ignitis Renewables management team by the end of this year. Furthermore, we expect our green generation expansion to speed up even more, as we witnessed significant changes in renewables related legislation. Firstly, to increase energy independence, Lithuanian Ministry of Energy presented the Energy Breakthrough Package. Despite its still pending approval in the parliament, its goal is to speed up the development of renewables, mainly by easing the access requirements and putting clarity on local community support. In addition, a significant milestone was achieved in Lithuanian offshore wind development front, as legislation setting the development framework was approved. A final and the most important message I would like to address is about the events currently happening in Ukraine. Let us be clear, we condemn Russia's unprovoked invasion of Ukraine. This goes against our values, and we have taken and will continue to take action supporting Ukraine and its people, as well as human rights and energy independence. On the latter, we are proud to say that Lithuania became first EU member state swapping Russian natural gas. Even though natural gas supply is not the core business of the group, we suspended natural gas purchases from Gazprom by replacing its supply with LNG cargos. This together will increase in the market prices led to an increase in the working capital needs. In order to ensure market demand and uninterrupted gas supply, as well as to fund working capital needs, the group concluded credit line agreements with banks with total limit of around 400 million euros. Despite additional risk factors, proper actions have been taken to manage them, and no significant changes in risk levels of key risks of the group were recorded. The group constantly monitors the situation and analyzes the latest information and changes in external factors and their impact on the group. In the same manner, group also ensures uninterrupted supply of energy and business continuity. With that, let me now detail the developments of green generation segment so far driving our results the most. As mentioned so far, we increased our renewables pipeline by 230 megawatts as a result of capacity additions to our greenfield development projects. To remind, we successfully started these early-stage development projects in 2021 by securing land plots for onshore wind and solar projects in Lithuania and Poland. And now our greenfield portfolio amounts to around 400 megawatts. It includes different projects, and we expect them on the project-to-project basis to launch during 2024-2026. We also continued constructing and developing our existing projects with no changes in key milestones. All our green generation projects are fully on track with a minor deviation in the interim milestone of Vilnius CHP biomass. We still expect the project COD to take place in Q2 2023. However, due to a global supply chain disruption and workforce shortage mainly affected by the Russians' invasion of Ukraine, generation of first energy has been rescheduled to Q1 2023. On the next slide, you can see the renewables growth potential in our home markets update. Despite being fastened by intense geopolitical situation, legislation changes supporting accelerated green generation expansion was captured in almost all of our home markets. To begin with Lithuania, as shortly mentioned before, two key legislation changes took place during this year. The first is a breakthrough package introduced by Lithuanian Ministry of Energy. Despite its still pending approval in the parliament, its goal is to speed up development of renewables, mainly by easing the access requirements for environmental and impact assessment and sanitary protection zones, and establishing a framework of a support scheme for the local communities. The second is an approval of legislation setting general offshore wind development in Lithuania framework. On 31st March 2022, the Parliament of Lithuania adopted amendments to legislation foreseeing the start of the tender on 1st of September 2023. The amendments, amongst other changes, also determined the winner selection method, support and grid connection models. Finally, the next milestones include passing resolutions of specific tender requirements, for example, experience and financial capability, by 1st of July 2022, and an approval of tender rules by the National Regulatory Authority or National Energy Regulatory Council by 1st of September 2022. To continue with the Baltic states, no recent major legislation changes speeding up renewables capacity captured in Estonia. However, there are a few undergoing discussion in Latvia regarding the easing of wind farm development requirements for projects with capacity higher than 50 megawatts, and overall reduction of bureaucracy for processes like obtaining environment impact assessment. Moving to the market with the largest potential, that is Poland, a discussion over the easing of one of the major constraints is taking place. Currently in Poland, it is forbidden to construct wind farms within 10 times the height of the wind turbine away from residential properties, leaving almost no place in the country to develop wind farms. This restriction is called 10H Distance Act, and if it's eased, will be a major breakthrough for renewables development in the country. Now let's move to on each of the segments' performance over the first quarter of 2022. Regarding green generation performance, its growth was mainly driven by launch of Pomerania wind farm in Poland and better performance of our operating hydro assets. As a result, its adjusted EBITDA increased by around 270% comparing to first quarter last year and reached 70 million euros. With regards to new installed capacities, portfolio increased by 95 megawatts, which also pushed green electricity generated levels by almost 60%. Lastly, our investments decreased by almost 20% as new projects have not yet reached heavy investment phase. Turning to networks, year-on-year adjusted EBITDA increased by 5.6%, driven by higher RAB value. Its financial result increased by 2.3%, which was driven by introduction of an additional tariff component in the new regulatory period we started this year. We also continued our investments in maintenance and expansion of electricity grid, which we are higher by 66% compared to the same period of the last year. This increase was a result of a higher number of new connections and upgrades. On operational performance side, a decrease was captured in distributed volumes, mainly influenced by the fall in distributed natural gas volumes as the result of warmer winter. However, we did not avoid extreme weather conditions and natural disasters, which in turn negatively affected our quality indicators, SAIDI and SAIFI. Lastly, and in accordance with the schedule, we successfully kicked off with the smart meter rollout project. We received the first batch of them for testing in Q1 and plan to finalize the information system tests as well as start installing the first batch of smart meters in Q2. Contrary to the growth in core our business segments, we captured worse results in customers and solutions, mainly due to negative electricity results due to ineffective proxy hedging, and negative natural gas results driven by realized hedges, which was partly offset by temporary effect from the natural gas inventory. As the result, this segment's adjusted EBITDA decreased from almost 16 million euros compared to the first quarter of 2021. Also, extreme situation in commodities prices as well as geopolitical environment led to the net working capital increase by 64.2 million euros, mainly due to higher natural gas inventory value and temporary regulatory differences, as well as purchases of unscheduled LNG cargos, as we no longer acquire natural gas from Gazprom. To point out, the amortization mechanism of increased electricity and natural gas prices was just recently amended, leaving government reducing burden for the customers directly from the state budget from the second half of 2022. In addition, the government will take over significant regulatory debt, thus reducing group's net working capital and debt level. Let's now move to the performance of our four business segment, flexible generation. There we have been no major changes on its side except a decrease in the merchant activities due to the less favorable market conditions. In turn, also lead to both adjusted EBITDA decrease by 38% as a significant drop of around 83% in volumes generated. Worth pointing out that considering the current political uncertainty, natural gas reserve of 1.1 terawatt-hour has been acquired. However, there should be no material financial effect from this transaction, as expenses are expected to be covered by isolated regime service tariff. With this overview of our business segment development so far in 2022, I hand over the word to the Group CFO, Jonas Rimavičius.
Thanks, Darius. We have delivered strong financial results in Q1 2022. Our adjusted EBITDA grew by 42.6% year-on-year and reached 111.4 million euros. Green generation segment was the largest contributor to the growth and increased more than 3 times, adding additional 51 million euros compared to the same period last year. The main drivers behind this growth were launch of Pomerania wind farm in Poland and better hydro portfolio results, both driven by higher electricity market prices. It is worth noting that for Pomerania, we managed to reschedule the full entry into CFD scheme and will be selling substantial proportion of electricity generated on a merchant basis for years 2022 and 2023. Moving on to the network segment, in Q1 2022, we had a minor increase in adjusted EBITDA, mainly due to newly introduced additional tariff component. This component has offset lower electricity WACC and lower share of allowed return earned in Q1 due to temporary volume effect. For full year numbers, volume effect is not applicable. Therefore, we will have higher growth for full year numbers compared to what we see in Q1. In our smaller complementary business segments, we saw adjusted EBITDA decrease year-on-year. In flexible generation, result decreased by 3 million euros compared to last year due to lower commercial generation volumes affected by high natural gas prices. On the customers and solutions side, negative result was driven by electricity supply business negatively impacted by ineffective proxy hedges, and natural gas supply business negatively affected by customer consumption over declaration in the end of 2021. As a result of an increase in our adjusted EBITDA, all other return metrics have improved as well. Our adjusted return on capital employed increased to 8.7% and was 1 percentage point higher than last year. Adjusted net profit grew by 74.1% and reached 61.1 million euros, while adjusted return on equity increased by 1 percentage point to 9.9%. Next, we increased our investments by almost 50% compared to last year. The total investments in Q1 2022 reached 43.1 million euros, driven by network segment, which accounted for 3/4 of the total. However, we have not had significant investments in the green generation in Q1 because several large projects were completed last year and new projects have not yet reached heavy investment phase. Going forward, we expect green generation to dominate the investment mix. Now turning to net working capital and free cash flow situation. On the left side of the slide, you can see that our net working capital has increased by almost 200 million euros compared to the end of 2021. This was mainly driven by higher energy prices and us acquiring more LNG cargoes to secure gas supply to Lithuania and wider region, as we have terminated gas purchases from Gazprom. This has in turn led to a higher natural gas inventory, which increased by 237 million euros since the end of 2021, and increase in customers and solutions regulatory debt by almost 95 million euros due to the difference of energy prices included in regulated tariffs and the actual market prices. As a reminder, these differences do not have an impact on our adjusted profitability metrics, but do have a meaningful impact for our working capital requirements. On the right side of the slide, you can see that our free cash flow was negative 140 million, which was caused by increase in net working capital, which we just covered. Looking at our leverage metrics, our net debt has marginally increased, driven by the increase in net working capital, which has been mostly offset by higher FFO and receivable receipts from EPSA-G in relation to sold electricity transmission assets back in 2011. FFO to net debt decreased from 30.5% to 29.7%, but still remains substantially above 23% threshold required for BBB+ credit rating. Net debt to EBITDA has even improved from 2.9 to 2.7 times. So overall, despite substantial increase in net working capital, our leverage metrics remain healthy and makes us well positioned for delivering our growth targets. And finally, as a result of our strong Q1 performance, we updated our full year adjusted EBITDA guidance. We now expect our 2022 adjusted EBITDA to be in the range of 330 to 360 million euros, up from previous 290 to 335 million euros, which represents a 10% increase for the midpoint of the range. This revision is driven by significantly better performance of our green generation segment during the first quarter of the year. With that, I give the floor back to Darius Maikštėnas to conclude the presentation.
Thank you, Jonas. Let me now to sum up the key highlights of the group performance in Q1 of 2022. Ignitis Group adjusted EBITDA increased by 42.6% compared to the first quarter of 2021. The growth was driven by green generation segments due to the launch of Pomerania wind farm in Poland and better results of our operating hydro assets. As a result, green generation share of adjusted EBITDA accounted for 2/3 of our business. These strong results led us to 2022 adjusted EBITDA guidance update to a range of 330-360 million euros. To keep up with further growth, we added around 230 megawatts to our green generation project portfolio, strengthened our renewables management team. On top of that, we continued working on development projects and capture no changes and see no changes in the key milestones. Finally, we expect further growth to be supported by legislation changes across our home markets. Thank you for listening. Now we are open for your questions.
So this now concludes the results presentation and opens the floor for a Q&A session. Operator, handing over to you.
Thank you. We will now begin the question and answer session. If you wish to ask a question via audio, please press star and 1 on your telephone keypad and wait for a name to be announced. To cancel your request, please press the hash key. Alternatively, please use the question box available on the webcast page to submit your questions.
As currently we are waiting questions from the line, so we will begin from the received and written. So the first question was on GDRs. What's the current split between Ignitis Group ordinary registered shares and GDRs, excluding the state-owned share?
So the current proportion of GDRs versus shares is equal to 41.4% on the GDR side and 58.6% for the shares. And by the way, you can find the split disclosed in our Q1 interim report.
The next question is European Bank for Reconstruction and Development, or EBRD, still one of Ignitis Group shareholders, and has the number of shares it holds changed, if you can disclose such information?
We cannot comment on holdings of our shareholders apart ones that are publicly disclosed. Based on publicly available information, EBRD continues to hold the same 4% stake in Ignitis Group.
Thank you. The next question is, what is the situation in the Vilnius CHP's biomass unit? The latest information states that first energy will be generated only in Q1 2023. Will there be any further delays? Is there a risk of legal action from the state, municipality, or other parties due to the delay? Also, by how much did the project cost increase? Have you received the EU CapEx granted? Can the grant be cancelled due to the delay?
Thank you. Regarding Vilnius CHP biomass unit construction, there is no delay in the key project milestone, which is start of commercial activities, as we expect it to take place in Q2 2023, as previously communicated. The only minor deviation, as mentioned, is interim milestone of the generation of first energy. Due to the global supply chain disruption and workforce shortage mainly affected by Russia's invasion of Ukraine, first energy generation has been rescheduled to Q1 2023 from Q4 2022. Other than that, we continue construction works and just recently signed contracts with biomass boiler supplier and other companies responsible for its installation-related works. Having the setup required to finalize the construction works cost as to revise project budget, which due to the changes in the environment of supply and construction markets increased by around 10%. On EU CapEx grant, the grant was received, thus having no risk behind it. And finally, we do not foresee any further risks regarding the project finalization.
Thank you, Darius. The next question is on dividend policy. Are there any signs that indicate potential amendments of the dividend policy by increasing or decreasing dividends? Will you ensure the continuity of the dividend policy?
Yes. So we do not foresee any changes regarding our dividend policy. We remain strongly committed to our current dividend policy, and it is illustrated by the fact that we kept our commitment and paid the dividends according to the policy, both during the global pandemic and now during Russia's war in Ukraine.
Our next question is, will Mažeikiai wind farm be launched on time? Have by how much the project's cost increased?
Okay, so we don't see any changes in Mažeikiai wind farm COD, and as communicated previously, expected to be launched in Q1 2023. Regarding the project costs, since the project CapEx has been fixed before making final investment decision, so there is no exposure to the project cost increases.
Another question on green generation pipeline. Why did the agreement with Sun Investment Group regarding the 170 megawatt solar park portfolio in Poland was terminated? Did you see no opportunities to develop them under PPAs or merchant environment by abandoning the auction idea? Will Ignitis Group experience any profit or loss after terminating the contract?
Okay, so the reason for terminating the contract was simply that according to initial agreement, the developer had to obtain CFD tariffs in the auction. They did not do that. Therefore, one of the conditions was not met. What we did after that, we tried to negotiate the agreement based on indeed PPA or market terms. However, since no agreement regarding acceptable return level was reached, we decided to terminate the agreement. There were no financial losses to the group, so all the advance payments have been returned to the group. And also, probably it's worth to note that this transaction illustrates our commitment to not only build the megawatts but also to earn our target returns while doing so.
Thank you, Jan. The next question is there 80 megawatt project in Poland on track? Will the project start generating energy in some capacity still this year?
Again, for this project, similarly as to Mažeikiai, we don't foresee any changes and expect it to launch during 2022-2023 as disclosed previously.
Our next question is the 160 megawatt project in Latvia on track? Any risks there? Also, does the project have no actual issues? As far as I have heard, projects in Latvia can be sold with incomplete legal framework. How do you scrutinize the projects you acquire, and are there any insurances against any potential risk?
Okay, so for Latvian onshore wind farm portfolio one, similarly, we don't see any changes and expect it to be launched during 2025-2027. In terms of risks, so before acquiring the project, we scrutinize them very thoroughly with both our internal teams as well as external advisors when we perform legal, technical, financial, and tax due diligence procedures. However, naturally, these projects are still in the development phase, so they are exposed to the risks typical to such projects.
Thank you, Jan. The next question is, any prospects and possible other green generation projects in Latvia? What is your opinion about the prospects in Latvia in general? For now, Latvia has very little installed total wind solar generation, and the legal framework has not been approved yet. What are the other obstacles restricting investments there? Is there enough transmission capacity in Latvia in their transmission network?
Latvia targets have around 2.5 gigawatts of installed renewables capacity to be reached by 2030 compared to the current capacity of 1.8 gigawatts. However, geopolitical events forced Latvia as well as other countries to review their renewables targets and the achievement. Due to the lack in the latter, currently there are undergoing discussions to ease wind farms development, which capacity exceeds 50 megawatts basically by reducing bureaucracy in Latvia. We see this as a key step to hasten the renewables development in the country, basically.
Thank you, Darius. The next question is on Lithuanian offshore project. The first 700 megawatt offshore wind farm in Lithuania is listed as the future project of Ignitis Group. It is even listed as under development in the group's portfolio. Do you have a plan B if you are unsuccessful in the tender? What is your assessed probability to win the project? Will you be able to maintain leveraged equity returns target at a high single digit, low double digit?
Thank you. We feel confident on our competitive advantages in this project. Yes, we expect to ensure the target returns. Currently, we are preparing for the auction together with our partner, Ocean Winds.
Thank you, Darius. Our next question is, are there greenfield solar wind projects of Ignitis Group based in Lithuania or maybe elsewhere? How many there are, and what is their capacity at the moment? Are there any locations left with sufficient network throughout in Lithuania for such new investments? Will you change your position and start acquiring later stage projects?
Okay, so currently our greenfield portfolio is around 400 megawatts. It comprises both solar and onshore wind projects in Lithuania and Poland, with Lithuania accounting for significant majority of it. In terms of grid capacities, so we still see grid capacity, but grid capacity is available in Lithuania, but we start seeing limitations in some of the locations. However, when we target the development areas, we look for the ones with largest available capacities. In terms of acquiring the projects, we do that as well. In our strategy, we have defined that both the possibility to acquire as well as to develop projects by ourselves are two equally important streams, and we are moving in parallel with both of them.
We have one more question. What is the Ignitis Group strategy when developing, acquiring new wind farm solar parks? Will you sell electricity under PPAs or in the market? What is the planned proportion between these two options?
Yeah, so in terms of the offtake from green generation, majority of the projects with major part will be covered with internal PPA agreements, with minor part being sold in the market.
Our next question is, do you receive equipment for solar wind projects on time? What is the increase in the cost of the equipment, and will the increase be reflected in the financial results of the projects that are currently under development?
So for our current projects, we do not foresee any delays in deliveries. However, we cannot rule out the risk, especially for future projects, due to current market conditions, because of geopolitical situation in the region and general supply chain issues. In terms of the pricing levels and the impact on the financial results, we see the increase in capex levels for new projects, probably in the double-digit area. However, due to the higher electricity market prices, we do not see negative changes in project returns, as capex increase is offset by higher power prices in the market.
Thank you, Jonas. The next question is on natural gas. So, the gas reserve Ignitis Group has heavily impacts the financial results. How much the capacity of the own gas reserves changes over time? What is the current reserve capacity and where it is being held?
Natural gas inventory reserve is held in Latvia in Čukon storage. Normally, we would store up to 1 terawatt-hour of natural gas during the year and empty it during the heating season. Taking the current geopolitical situation, the natural gas inventory is held at a higher level of around 2 terawatt-hours.
Thank you, Darius. The next question is, how do you evaluate Ignitis Group's credit score and its future changes? On one hand, Ignitis Group has a large debt at the moment due to price amortization. On the other, a large part of the accumulated arrears should be covered from the state budget. Do any of these factors can change the current credit rating?
Yeah. So regarding credit rating, as you've seen in the presentation, our main credit metric, FFO to net debt, is equal to 29.7%, which is still substantially above 23% threshold required for BBB+ credit rating. In addition, the recent legislation changes on energy price amortization means that regulatory debts will be moved from our balance sheet to the state budget, which will have a positive impact for our leverage metrics. Therefore, in short, we do not expect changes in our credit rating.
Next question is, how much have been accumulated from the amortization of the public electricity supply? How how much has been accumulated from the gas supply and what part of it will be covered by funds from the state's budget?
Okay, so from the total from electricity and gas currently is around 300 million euros, and based on the legislation updates, the vast majority of these accumulated temporary differences or consumer debt will be moved to the state budget.
Thank you, Jonas. Our next question is, does the independent electricity and natural gas supply carry a loss for Ignitis, or does it earn profit?
So we have independent supply activities in electricity and gas B2B and electricity B2C subsegments. All activities generated positive adjusted EBITDA except for electricity B2B, which was negatively affected by mark-to-market of open positions from ineffective proxy hedges. However, the overall result is negative from independent supply activities, as it is illustrated by negative customers and solutions segment result.
Our next question is, does Ignitis Group plans to invest more into startups, for example H2Pro? What is the situation with the currently made investments?
Thank you. We continue to exploit opportunities and promising startups through our Smart Energy Fund. And in 2021 was a year of record. Total investment asset value grew by 20.4 million euros up to 25.3 million. To continue the growth, we are working on the establishment of second Ignitis Innovation Fund.
Thank you, Lars. The next question is the UK offshore wind farm project, Ignitis Group owns 5% stake in that, on track and unexpected challenges?
Yeah, so we don't see any changes in the communicated plans of Amori West, and expected to become operational in 2025 as previously communicated. And on the other hand, we are also benefiting on our side. We are, as planned, sending people to Amori West to learn about offshore development and construction, so that we bring that knowledge back to Lithuania and be ready for building offshore here.
We have another question. Industry peers in general report that capex inflation 5 to 10% in wind and 10 to 15% in solar is fully passed through to PPA prices. Could you please provide a bit more flavor about A, average PPA price and dynamics, B, average PPA duration and dynamics, and C, share of electricity production sold to off-takers through PPAs?
Okay, so yeah, in terms of capex inflation, so the numbers are more or less in the ballpark of what we are seeing. In terms of it being passed through PPA prices, indeed, that's currently the case. As I mentioned previously, high electricity market prices currently offset the negative impact of the capex increase. In terms of average PPA price and dynamics, so probably it's fair to say that PPA prices have somewhat increased across the region. In terms of the actual levels of the prices, I wouldn't comment on that because it is different for each individual country. It differs for each structure of PPA. So I wouldn't comment on absolute levels. In terms of PPA duration, so the market standard is 10 years. And in terms of share of electricity production sold to off-takers through PPAs, again, we see a majority of that covered through PPA. In our case, that is mainly internal PPAs, and the minor part sold directly to the market.
Thank you, Jonas. The next question is, current environment, surged power prices, increasing demand for PPAs, drive for energy independence in the EU is very supportive for asset rotation. When one can reasonably expect news on asset rotation deals? What kind of premium over capex could one reasonably expect to be captured?
Yes, so indeed it is true that current environment is very supportive for asset rotation. As previously communicated, we intend to kick off our asset rotation program in 2022. And when we sign the binding contracts for asset rotation deals, we will communicate that to the market. In terms of premium over capex to be captured, in short, there is a premium. The level of that we will share once we close the transaction.
Thank you, Jonas. The next question is, does Ignitis still want renewable energy sources projects with subsidies or maybe persistently higher prices amid EU independence push? Change that view a bit?
So, subsidies is a good thing to have on renewable energy projects. It reduces the risk of the project. However, naturally, in the current environment, in the environment which is more focused on energy independence, environment where we see higher power prices, subsidies are less relevant in the environment for most of the technologies.
Thank you for the answer. As we have no further questions, we may close this presentation. So again, thank you for all joining us today at our Q1 2021 earnings call. Should you have any questions, please do not hesitate to contact our investor relations team. So thank you for standing by.